Hello everyone, my name is Patrick and welcome in today's video in which I'll be talking about how you can invest $500 and earn passive income for the rest of your life. But first, please smash the like button and help me grow on YouTube. So let's get into it. The first option is investing into indexes. For example, Dow Jones Industrial Average Index, which is an index that consists of 30 companies, 30 stocks. For example, stocks like 3M, Apple, Cisco, Coca-Cola, ExxonMobil, IBM, Intel, Pfizer, McDonald's, Johnson & Johnson. As you can see, most of them or a lot of them are dividend kings and they are paying dividends. So there's a great opportunity to also scale your investment. So let's take a look at it. Let's say that you invest somewhere in the 1990s. Let's say that I'm 20 years old and I want to invest long term for over 30 years. So when I retire, I will earn passive income to live off of it. So if I invest in 1990, $500, and in 1990, I would make 1,000, almost 1,026, yes, 1,026%. So let's do a little calculations. Okay, so if I invested $500 and over 30 years, then that divided by 100 gives me a 1% times 29. After 30 years, my $500 would grow to over $5,145. But now, let's say that I want to invest, let's say about $100 every month into this index, and that would give me another $36,000. So $36,500 times 10.26 is $300,000, almost $380,000. So after 30 years, I would have my $500, or no, my $500,000 would grow to over $380,000. Plus, we didn't count the dividends that we would get from this, and the dividends make a huge difference because this number would grow to over $600,000 without a doubt. So that's the first option you can do. The next one is investing into government bonds. The government bonds are better for the people who didn't like to take as much risk, because as it says, government bonds, they didn't suffer as much throughout the tough times. Like you can see here, let's look at a better graph. 1 year here, if we take a look in the corona, it lost only 15% and quickly came back up. If you take a look at other charts or indexes, you can see that they lost so much more. But there is a big difference in how much money you make in government bonds, because they provide a lower risk percentage but also a smaller returns on your investment. So let's say that we invested also $500 in over 17 years and we would get 98%, and also invested $100 every month. So it would equal to somewhere about, if my calculations are right, $28,000. So your $500 plus $100 every month would grow to around $28,000, and you would invest around $29,000. So your money would double, almost doubled. But it's not as much as investing into Dow Jones. And also Dow Jones, if you invest into indexes, you need to pay commissions, but there is option on eToro to invest into ETFs. So for example, if we go here into index ETFs, into my watch list and click on SPDR Dow 30 ETF, it is ETF fund of DJ30 index, and you can see here that it provides a same 1 year return as DJ30. Yes, it's the same, and it is no commission, it's commission free. So if I want to buy, I can invest any amount I want, $500 as I said before, and I pay no commissions, it's commission free. So that's a great opportunity. The next thing is investing into real estate. If you don't want to go into real estate on your own, then you can invest your money into real estate companies. For example, a company like Realty Income Corp, which provides a dividend yield of 4.47%, and since the beginning they grew over 626%, which means which is a huge number, and also a huge dividend income. And it's a great, I think it's one of the best companies in this in real estate, and they have a huge portfolio, and their top 20 tenants consists of Walgreens, 7-Eleven, FedEx, Walmart, and companies, very successful companies, Kroger. So I don't think that there is they have a huge, or not huge, they have a big payout ratio, but there is not a big risk involved, I think. And they also pay their dividends monthly, which is great. So yes, and the last thing I would like to show you guys is the power of dividends, because in Dow Jones 30 there is also a company, for example ExxonMobil, which is a company that is in the oil sector. So let's take a look at it. ExxonMobil, and they currently provide a dividend yield of 8.01%, and for the amount of $43.44. So let's do a little calculation. Let's say that you invest $500 into this company, and your annual from this investment would be $500 times 0.0801. So you would get $40 every month. And let's say that you do this for over 30 years, so times 30, and your money would grow to $1,200 plus the $500 initial investment, so $1,701 times the dividend yield 0.01801. So after 30 years you would get $136 every year just from the $500 that you invested 30 years ago. So this is the power of a compounding effect, and be aware guys that this is a number that came just from the single one stock, and you can invest into as much companies or as many companies as you want. For example, I have already a pretty big portfolio which consists of 21 stocks, and all of them are paying dividends but Amazon is not. This one is for a capital growth of my portfolio, because you must have some of these. So okay guys, that's all for this video. Please leave a like, comment down below, consider subscribing, and follow my Instagram page. Okay, goodbye.